Hi everyone, welcome to another episode of Decoding with Finsec. I'm Rashmi, I'm an associate with the firm, and I have with me here Mr. Sandeep Parekh, the managing partner and founder of Finsec Law Advisors. And today we will be decoding a very hotly discussed topic, Finfluencer regulation. Um, just to start off the conversation, Sandeep, I have grown up with social media and I've seen the influencer economy really pick up after COVID, right? And I have a lot of peers and a lot of colleagues and friends who turn to social media for advice on all facets of life, be it travel, be it financial decisions, be it health, be it fitness. A specific segment of content that has really picked up is financial content, right? And I can see the reasons for it. After the pandemic, there has been a significant uptick in retail investment activity in the markets. Young investors are very tech savvy and are willing to take on more risk than their older generations, if I can say so. This has contributed to a lot of activity in the markets, and there are obviously creators who are coming in to sort of educate the public, and there are also some rotten apples for every um, influencer that is educating the public. There's also an influencer who's giving stock tips. There's also an influencer who is giving option strategies. And the way I see it, the concern really is that as a viewer, as someone who goes on the internet and comes across, let's say, a stock tip or a recommendation, I am not aware of the position that that influencer may hold in the stock, right? Or the benefits, monetary or non monetary, that the influencer may be receiving from an entity, which may cause their advice to not be the most objective or not be in the best interest, my best interest. So, as someone who has seen the market sort of go from where it was in the 2000s to post COVID, what are the concerns that you identify? Is there, what is the need to regulate influencers in India?
Yeah, first of all, thanks, Rashmi. I think from the older generation, I think I can say for sure that we didn't have social media growing up, and certainly it's post COVID has been a very dramatic change in behavior. People are very comfortable with the stock markets, and unfortunately, too comfortable. I think both there were two studies, both of them showed 89 and 93% retail investors are actually losing money in the market, especially the F&O market, really. So I think it's education, of course, does have a key role. Let me just start with kind of the big principle, which is the constitutional right of freedom of speech. So you have one at that one extreme, and the other extreme is the most regulated form of speech within SEBI's domain. That is, investment advisor. They specifically mentioned very in great detail what can be said, what how it can be said. Even for saying the facts, for instance, your past records now they will not be able to state facts. A simple algorithm, not even an algorithm, just a simple calculator based return profile of your past predictions. You won't be able to share with your investors. So we have a hyper regulated world of investment advisors, um, uh, and the completely free for all of what you describe is, I call them Finfluencers because most of them offer a lot of useless advice. But again, being kind of useless and giving wrong advice is not a crime. If you're clueless and you still think, people give all kinds of culinary advice, even though they're kind of pretty bad at cooking. So I mean, people have this, I guess, superiority complex about themselves, especially if they've made a little bit of money in the past. Most of these people who actually make money are actually making money by these videos, right? So they get commissions if they widely watch, and of course, almost all of them have very high quality of communication skills, and that's probably kind of one uniform factor. So you'll have, at the one end you have educational broadcasts which are useful. Um, at the other end, you have crooked people, right? Um, where people are taking money, or people have opposite positions in the market, and they kind of say buy this, and they're quietly selling the same stock. So in the middle are, I think vast majority of clueless people who think they're giving yarn. but they themselves are kind of not really making any money except through these videos and stuff. And between the crooked and I think between the crooked and the people who are clueless, there's another segment is kind of somewhat compromised, but not really crooked, I would say, which is people who are getting money from especially registered, let's say, mutual funds, brokers, investment advisors, where they're getting kind of some kind of a cut or some kind of a payment for saying something. Again, this may not be crooked, but it should be seen as compromise content. And several years back, SEBI introduced norms for people who come on TV. So every time you see open CNBC, you will always see a person comes out with a disclaimer that I may have a position, long or short position, and so stock. So I think the just I was just giving kind of the big framework in terms of where we are and how to kind of interpret multiple issues. Again, like I said, starting from the constitutional freedom of speech till something which almost amounts to a financial crime. You have a whole range of events which are occurring every day.
That's very well put, Sandeep. There are definitely there is a finfluencer who's sort of uh, you know there's one bad influencer for every genuine finfluencer who wants to educate the public. And I also do acknowledge the need for financial education in the market, right? There is a gap that exists with financial literacy in Indian investors that some influencers, very rightly so, are stepping in to sort of bridge. So there are concerns in SEBI. For the benefit of our viewers, we'd also touch upon the framework that exists at the moment. So SEBI, as you may be well aware, after about a year of deliberations, introduced the first, if I may put it, formal framework for Finfluencers, right? So in August 2024, SEBI introduced a prohibition, essentially prohibiting a regulated entity, say a broker or a mutual fund, from directly or indirectly associating with any individual who A, makes a claim about performance, or B, gives investment advice or recommendations about a security, without, of course, being licensed to do so. SEBI consequently, over the next couple of months, also issued directives to regulated entity asking them to terminate any existing contracts with such individuals. Now, a key distinction that SEBI has tried to draw is between investor education and advice. And, of course, like you said, influencers do walk a very fine line between advice and education. Now, I'd like to focus on a specific proposal SEBI sort of issued earlier last month on December 6th, where SEBI has proposed to clarify a parameter basis which a regulated entity can identify a person who is making making claims about market performance or investment advice. And SEBI has proposed to do that on the basis of the use of price data of the last preceding 3 months. So any uh, Finfluencer, if he or she or them uses price data for the last 3 months in their videos or their posts, etc., then the regulated entity is advised to sort of not associate with that person. Um, Now, the problem I see with this, as someone who does turn to social media often for financial education, is there are a number of influencers who are helping people understand how to analyze a stock through a technical analysis, right? And the best way to do that is through updated market prices. So let's say I want to understand if a stock price is overvalued and doesn't sort of tally with, let's say, the forward PE ratio. I will go on the internet and there will be somebody who can explain the method to me. So what do you think about this parameter? Is this it's a good distinction to draw? And what are your views on how we can distinguish between education as opposed to advice?
So I think SEBI has kind of divided two classes really. I think they've drawn a kind of a red line saying these are the regulated entities. This is how we're going to handle them. These are the unregulated people. If you want to be in touch with them, number one, don't be in touch with them. Number two, if you want to be in touch with them, you want to use their services. This is what you need to do. and of course those are quite cumbersome additions which they put on the regulated space. I think there's a much simpler way, because then you're really attacking the problem only from that 1% of the people who you regulate. And 99% you're saying it's not my problem really, but it is your problem, because investor safety of investors is actually part of the preamble of SEBI. It doesn't say SEBI shall only protect registered intermediaries and their investors.
Absolutely.
Protects everybody. I think the it's probably coming from the fact that they have limited bandwidth to go after a million influencers. But I think it's a wrong approach, because I think there's a very simple approach to do this. I think, which is that you have a simple code of conduct for everybody, not applicable to just to registered intermediaries, and you basically say that number one, you thou shall not commit fraud. Again, just put in the code of conduct is the law. Everybody knows it, but put it out in a single line, easily understandable. Second is the gray area which I mentioned, is if there's some kind of conflict, disclose it. I mean that makes most of these problems go away. And again, that should be applicable to everybody. ASCII has actually done that, which is the advertisement regulatory body. There's this whole set of guidelines. They've in fact taken some enforcement actions as well. SEBI periodically takes enforcement action. Almost every week, I see one order on some influencer who's making vague claims, etc., saying you're an unregistered investment advisor and stuff. So I think there's a simple way to do it is to A, prohibit fraud, B, disclose if there's any conflict of interest, and C, basically allow people to talk freely. I think I wrote a column some time back saying that under the anti-fraud laws of India, Warren Buffett would be a criminal. So we go so broad in terms of how we define fraud, that we catch all kinds of conduct. Whereas the people who we need to catch really, I think they I mean we see it on social media. They're having quite a free run, and not to blame SEBI, because they do have indeed limited bandwidth. But at some point, I think it's useful to kind of put the rules of the game very clearly, and to everybody. They did it for media, right? They did it for uh, electronic media. So every time you see any recommendation, you do see that disclaimer. There's no reason absolutely why it can't be done for social media. And it's like, again, if somebody violates that, you can catch that person saying that whether you conflicted or not, you did not disclose, and therefore I'm going to take action against you.
Absolutely, that makes total sense, and I think it also ties in with the approaches that foreign regulators have decided to take about this issue, where they've issued do's and don'ts that also help influencers guide their conduct on the internet, right? So they're more aware of how they're supposed to behave, what they're supposed to talk about. So it's interesting how you've reimagined the entire regulatory framework for influencers. I think it also addresses one very key gap that I was able to identify in the existing prohibition about unregulated products, right? Because as far as I see it, the prohibition only extends to any claims I'm making, an influencer is making about a security. Now, what about products such as cryptocurrencies or digital gold, for instance, that don't constitute a traditional security under SEBI regulations? The concerns still exist, and a influencer can go on the internet, hype up a crypto, let's something like a Bitcoin, and there will be the concerns still exist. There can still be investor protection is still at stake, but the prohibition doesn't necessarily cover it. Or another circumstances we can consider is, let's say a influencer goes on YouTube and hypes up a stock, and they're not necessarily being paid by a regulated entity to do that. There is no arrangement with a regulated entity, and they're making money off um, marketing costs that are being provided to them by the platform itself. The concerns in all of these scenarios still exist, except the prohibition doesn't really cover it. Do you think the way you have reimagined the framework would adequately address these concerns?
So again, it's like I said, SEBI's problem is investors for sure, but SEBI's name itself, the first word is securities, right? So their remit is not to solve all the frauds in the world, right? Cricket betting is not SEBI's problem, and neither is crypto. So I don't think we should try to help them solve every investor problem. So within the security space, I think they've been given the mandate of prohibiting fraud. B, getting disclosure out for conflict of interest, whether it's potential or real. It should be disclosed. And three, just tell people, this is what we expect from you in terms of a code of conduct. And I think the current approach is both number one, very, very narrow. It's too focused on the regulated entities, or anyway overburdened with laws which basically say you can't disclose a mathematical formula of a minus b divided by a. So I think we've gone too far in one direction, creating both massive type 1 errors and type 2 errors. So guilty are going scot free, and the non guilty are actually in a lot of trouble.
Absolutely. I do think, like you said, enforcement tools and regulatory tools which are already in place do give SEBI sufficient powers to take action against these errant entities. And possibly a better way to go about this is to amp up monitoring and surveillance mechanisms. So you're able to catch hold of the individuals that are really going wrong, and you're not you don't have a catch-all prohibition against for all regulated entities. Um, do you have any suggestions on, except for having a code of conduct, any other suggestions on, how they can be better regulated?
So I think the number one way to do it is, I think both uh, exchanges and SEBI have a lot of funds in what they call investor protection fund and all that. I would want them to use social media itself to be the educator. I do know exchanges do fair bit of that already. But why can't the regulator itself also add to that? Have a presence uh, periodically. RBI, I get automated calls once in a while from RBI. You see full page ads in the newspapers from RBI cautioning on cyber crimes, for instance. So I think kind of an outreach. If people are misusing the platform, it's also a great platform to reach you're an investor, and talk about what are the kosher things, which are the things which are fraud, examples of frauds, how to kind of catch conflict of interest. If you don't see a kind of disclaimer, your antenna should be up. Why is it somebody giving me free stock tips? Nobody's giving you free cash. Why would they give you free stock tips? So I think all these are really important, and ultimately I think till the time you remove these kind of wrong conceptions from the market, bad conception will keep cropping up, because it's profitable to kind of make fools of other people, whether it's illegal or whether it's conflict of interest. It's always profitable to kind of take advantage of lay investors. So I think it has to be attacked from multiple fronts, like I said: anti-fraud, conflict, and kind of investor education.
That's very insightful, Sandeep. I think we can wrap up our conversation here. I'm sure there's a lot of food for thought for our viewers and me as well. Thank you for sitting down with us, and thank you for joining in. We'll catch you in the next episode.
Thank you.